Welcome to Yield Nerd, an educational show about how you can acquire and manage yield. All right, Yield Nerds, hope all of you had a wonderful eclipse day. I am watching my own kind of eclipse. It's the eclipse of the fundamentals in yield investing. At least that is how it seems to me. So I was going to review whether or not there is a disconnect between fundamentals and investing in our chat today. Hey, we're up to 288. Thank you for following. We're about a year and a half into existence. If you're new, consider using the playlist. And if you're not, you should still remember that I do not have any magical powers of prediction. I cannot pull rabbits out of a gold coin hat. Well, the agenda today, I thought I would review what is happening with respect to some of the tremors in the market in the last 3, 4 weeks, something like that. Look at the food and energy sector, my favorite. Everybody else ignores it. You spike it out of the CPI, and so I like that. What you ignore, I like. And another lunch money pick in terms of an investment that is interesting to me. And finally, next steps that I am planning on following. Well, looking at the market the last 30 days, the Russell is down. Hey, look at that. The Nasdaq is down a lot as well. The S&P is down, and so is the Dow, performing the worst in the last 30 days. And you look at that and you go, wait a second, maybe the ground is shifting, maybe everything is woken up. And, it's good to be an economist. Every week you can say on the one hand, on the other hand. And now economists are saying, well, I don't know if the Fed is even going to cut rates this year. And the way that I think about it, I don't control Chairman Powell. I don't control the economy. All I can do is make best decisions based on the information available today. And so what I thought I would do is go back to my favorite corner of the investing world, which is food and energy, and look at that and see where we are. And if you Google articles on food prices and energy prices, you've seen a lot of talk around the price of cocoa, which is at an all-time high. Orange juice is not too far behind, but because the crop failed in Florida. And when the crop fails in Florida, you don't get a lot of oranges, and that's because of some hurricanes that took out some orange trees and things like that. And you kind of step back and look at this and go, wait a second, that is inflation in the last 4 years. And even if prices only go up by 0.5% next year, you and I can sit here and say, look at that, that's, inflation has been tamed. But in reality, money is going out of our pockets into buying these things that many cannot live without. And to me, you can view that as inflation. I view that as earnings if you're in the right place at the right time. And so I start looking at food and I see a lot of companies that are going to make huge profits only because you and I cannot live without it. Even if prices drop, they are still at really high numbers. And you look at LNG, and I know the country is rightfully moving towards a clean energy transition, but that is going to take a while. In the meanwhile, the US has just taken over the market in LNG exports. And so that is making me rethink, where is that LNG going? How stable is that? What does it mean for the US to make that much LNG? What happens when the price goes up, goes down? And so when I look at food and energy, those are the two questions to me. And many of you know, and please make your own homework. I'm a big fan of Calmain Foods on the food side. And so I'm starting to learn more about the energy side and see what that means. And so my Eclipse pick follows a report made by a certain investment firm. And before I go any further, I do not have any financial relationship, any sponsorship with any entity. The investment firm I'm about to mention to you, I Googled them, and you can do that just as easily. There may be others with a counter opinion. The equity I'm going to talk about, once again, don't believe me, do your own research. So, as I started trying to understand what happens to all of this LNG and crude that the US takes out of the ground, because it's producing so much, a huge amount, where is it going to? And Poten and Partners has a newsletter that they send once a week. It looks at spot prices, it looks at crude prices, it looks at where the oil is going. And I enjoyed reading that. And here is an excerpt from last week's opinion, pardon me, which is They say they base it on research as well. And so they are saying a large amount of the West Coast exports are going to Mexico. However, the Mexican share of East Coast exports is actually declining. And you read that and go, interesting. So Mexico is not buying US LNG, US clean product. And you then sit there and go, if Mexico is not buying it and Europe's share is declining, then what is going to happen? And the US will be forced to find new buyers, or they can shut down more wells, probably a combination of both. And so US exports to Mexico will now need to find new customers. While Mexico is the closest onshore partner to buy US exports, and Mexico turns out has its own refinery, and so they would rather buy crude and refine it than buy the clean product. That's what's happening. And so when US refined oil or refined LPG is put in a tanker and it can't go to Mexico, it has to go farther and farther south, Chile, Peru, Europe, wherever it may be. That means product is moving over longer distances. And if they are moving over longer distances, that means whoever is shipping it will be making more money. And that is a very interesting concept that is called ton-mile demand in the tanker world. So if a ton of LPG or a ton of oil has to travel more miles, well, then you get paid more if you're a tanker. So my next blind squirrel call is the same as my previous blind squirrel call. I think more and more things are lining up for TK tankers. This is my opinion. You have to make your own judgment call. And so my trades, I put my money where my mouth is. I bought more TK tankers. And when it comes to treasuries, I am staying very, very short term. And I did increase duration here and there, but for now, I'm just going to stay short term at least until the election or if the ground shifts again. So TK tankers, my instinct is that they're going to have a good quarter because more oil travels over greater distances and crude price is increasing, geopolitical risk is increasing. Make your own call. I bought more TK tankers. My next steps are pretty simple. What you and I call inflation, other companies call earnings. And so as much as we can sit here and say, oh my God, inflation is not coming down, if you're a smart investor, you're going to say, where are things that we cannot do without and what can we do about it? And that is what I'm doing about it. And as far as interest rates, it is going to go down at some point. I can't do anything about it, but until then, I'm going to keep investing short term. The election scares me, but we'll see how it goes. In the meanwhile, I am sitting on very short-term treasuries and getting the best yield I can. Thank you for listening to Yield Nerd. Remember, even a blind squirrel finds a nut once in a while. Do your own homework. Thank you. Thank you for listening to Yield Nerd, a do-it-yourself show for yield accumulation and management.